Tobias, did something change, particularly last week in equity markets?
I think the new news on the Mexican tariffs, I think, was a change where investors weren't anticipating that, particularly as a function of there was movement towards taking the U.S.-Mexico-Canada agreement and trying to ratify it in Congress. And then all of a sudden we got the tweet from the president on Thursday evening. I happened to be in Mexico at the time, so it wasn't well received there. But I'm not sure it's irrevocably, which is kind of the word you used, although you used it with your accent as opposed to mine. And nothing is irrevocable. We do have some unpredictability and some erratic behavior in terms of some of how these tweets come out. And then we see pullbacks. So, for example, we've seen the auto tariffs with Europe or fears around import tariffs on autos from Europe kind of get extended and extended and extended from literally last July. So in that sense, things can change pretty much in a dime. And in that respect, is this more of a political kind of rhetoric? Is it more of a appealing to the base and trying to force some other negotiations? We don't know, to be fair.
Well, I mean, obviously you're focusing on the equity market, but you've got to be taking a sideways glance at the bond market these days, given, I mean, the 10-year yield got down to 2.07%. Is the bond market taking all of this a lot more seriously, the possibility of a slowdown and a recession, than are equities?
So I'm not 100% sure on that one, and I'll give you two reasons for kind of making that point. One is the bond market is a function of flows and supply, and we've had continuous positive flows into bonds all year long. And that money's got to get to put to work. You can't just sit in cash. Number two, because of what's happening outside the U.S., and you have, in many cases, negative yields, U.S. yields become very attractive to investors. And if there is fear about something bad happening, then the dollar would appreciate as a safe haven. So that's also kind of having an influence here. And it may not be a purely economic perspective. We have been concerned for a while that the tightening up of credit conditions in the fourth quarter of last year was going to have some implications. It normally does with a 9-month lag, and that investors were a little bit too complacent about this, call it 5-6 weeks ago. That complacency's pretty much gone away. And now the question is, are we headed for recession or not? At this point, we don't even see the reason. We just got ISM numbers today, again, not suggesting a recessionary condition.